Tesla stock falls 12%, posting its worst decline in over 2 years. This is all because Tesla's fourth quarter deliveries were 3% under the average analyst expectation. So was this drop really warranted? Probably not. But what can we look forward to over the next couple of weeks and the next couple of months with Tesla, as well as some other headlines coming out from Apple and other companies that really did not help Tesla's share price today, guys? So we got a lot to cover here in this video. You guys know the deal. If you like these kind of videos, or you just like making money, hit the like button and subscribe to the channel, because you definitely want to watch these videos each and every single day to stay up to date with what is going on. So first things first, let's get into this article, guys. And like it says, we're going to talk about the article a little bit later into this video, but we're just going to talk what happened with Tesla today, because it dropped 12%. It was a bad day. At some points you were down 14%, and Tesla just barely missed its delivery target. And if you guys are unfamiliar of what that target was, how many deliveries Tesla actually did in Q4, well, here are the numbers. So Tesla delivered 405,278 vehicles, and they produced 439,701 vehicles. So the average analyst expectation was for 420,700 vehicles to be delivered. So Tesla missed that by about 15,000 and some change. When you're talking numbers this large, they only missed by 3%. So a lot of people are coming out and talking about this demand destruction, that Tesla's going to see this terrible year because they're going to have a hard time finding demand. And the only reason, granted, these numbers were actually a miss, Tesla said in a note that it was because of the kind of lag time. The best way to think about it, when you order a vehicle from Tesla, if you ordered that 2 or 4 weeks ago, you're probably not getting that vehicle right now, right? You probably ordered your Tesla in the second half of November if you're getting it actually right now. Obviously, depending on where you live, I live in Michigan, delivery times are at least a month, if not more, just depending on what kind of make and model you're trying to get, where they are and where they have to be shipped from and shipped to. So you're seeing this problem, I guess you could say, with Tesla delivering vehicles not as quickly as some of us would expect. That's why they manufactured 439,000 vehicles and only delivered 405,000 vehicles. And that was obviously what Tesla wrote in their own note, that there's this lag time between buying and getting a vehicle actually delivered. So Tesla deliveries did not miss by a lot, but why did the stock go down 12% and down another 1% in after hours and pre-market? Depending when you guys are watching this video, it might not be too pretty as well. Well, the demand destruction argument, the recession argument, and the valuation argument, and that's because Tesla, they're valued so high compared to other automakers, compared to a lot of other companies, right? Tesla, pretty high valuation. That's because they're expected to grow 50% year after year for the next couple of years. Well, this 3% miss on deliveries has caused Deutsche Bank, I don't know if I'm saying that right, Deutsche Bank to cut its production of Tesla's full year deliveries to 1.84 million, and this all happened today, or roughly 40% annual growth, below the average 50% growth that Tesla has been targeting. Goldman Sachs cut its 2023 Tesla delivery forecast to 1.8 million vehicles, even as its analyst said in a note that deliveries should reaccelerate in the second quarter. So you're getting a lot of these downgrades here today. A lot of people slashing price targets, a lot of people cutting their growth expectations. And that's the whole reason why Tesla is valued higher than your typical S&P 500 stock is because it's expected to grow a lot more than your average S&P 500 stock. And actually, with Tesla's valuation where it is, the PEG ratio is a lot lower than a lot of other companies, and the PEG ratio is essentially the price to earnings ratio, but factoring in the actual growth rate. So Tesla, yeah, it's got like a 50 PE, 40 PE, if depending on if you're talking 2022 earnings or 2023 earnings, it's only around that mid 20% for 2023 earnings. So it's not really that crazy high to begin with, but it's essentially your PE ratio and your growth rate factored in together into an equation to give you this PEG ratio. The lower the PEG ratio, the higher the growth is typically, and the lower the valuation would be. So Tesla at a 0.5 PEG ratio compared to other companies that are 3, 4, 5, 6 PEG ratios, Tesla's actually cheaper than a lot of companies if they can fulfill this 40-50% growth rate year over year. But you're kind of just seeing expectations coming down a little bit after this 3% delivery miss. And that's really the big story of what is going on with Tesla as of right now. It's the fears over kind of where demand could go. Yes, if we do have a deep recession, and this should be the bigger argument with Tesla, then deliveries are going to probably fall off a cliff or stall out, or maybe even grow a little bit, but not nearly that 40-50% target that Tesla is targeting. If the economy only has a small recession or barely misses going into actual recession territory, and yes, I know a lot of people are thinking we've already been in a recession. Well, let's talk government terms. When you hear government, has declared we're in a recession, right? The Business Bureau, and you start to see that on the TV. If you're an average person, that's when they start to cut back, and that's where they go, do we really need this new Tesla? I don't think it's right now that is happening as much as it would if a recession was the top headline. That's where things are going to get a little bit more up in the air for a lot of companies as far as earnings are concerned. But if we avoid that, or it's not as bad as what some people expect, then Tesla will be just fine, and they will have tons of demand. They will have more demand than they have supply, in which has been the story for quite a long time with Tesla. Now, let's talk some of the other factors that played a role on the day, and this was massive. So Apple stock fell today almost 4%. At some point today, Apple was trading around 4.5%, 4.25% down on the day. And that is because suppliers out of Asia are starting to report that Apple is ordering way less of your Macs, your iPads, and your AirPods. We're not getting reports on iPhone yet, which is still over 50% of Apple's business. But what we're getting right now is not a good sign as far as demand with Apple. So you're getting a lot of demand concerns happening today. That's why you've seen the markets today were really a mixed bag. Some things did okay, but other things that are really focused on consumer demand did not do all too well. For an example, Amazon. I mean, a lot of people, Amazon is their main way they shop, right? That's more of an essential thing, more or less now today, than like an Apple or a Tesla. So Amazon did a lot better than Tesla or Apple, right? You're seeing kind of this flock to essentials, really, companies people need, companies that are not recession proof, but a lot more recession tolerant. So that in a nutshell is what is happening today. These were the two most important things. As of tomorrow, you are going to have economic data that can and will move the markets in a massive way. And there's really three important things happening tomorrow, or happening this morning if you're watching this video in the morning time. And this is obviously for January 2nd of 2023. That sounds pretty weird to say, and I might say 2022 in some videos, but you guys know what I mean. So the first important thing is going to be the ISM manufacturing PMI. This is kind of the producing side of inflation, or the producer side of inflation. Are their costs going up? If they are, they tend to pass those costs on to consumers. Not a lot of companies, people, businesses, corporations like to, take the loss of now it costs more to make that product and they're selling it for the same, right? They tend to pass those costs on, and that's why that is a big thing to the markets comes out at 10 o'clock in the morning. Also 10 o'clock in the morning, you get the JOLTS job openings for November. This is a big one because the Fed itself has been saying we don't need to see massive unemployment. We just need to see at least the job openings coming down for jobs to be a little bit more scarce. And this is the reading that the Fed pays attention to, and this is the thing that the markets are massively going to be paying attention to. So you got the JOLTS job openings. We're expecting 10.1 million job openings. That would be a decline of about 220,000 job openings month over month. So if this number comes in higher than 10.1 million, it's probably going to be a pretty bad day in the markets tomorrow. Tesla, Apple, probably everything would fall because that's a big problem for the Fed. Now, if this number comes in under 10 million, it's probably going to be a good thing. But at the same time, if you're less than 10 million, you got to be at like 6 million or 7 million, which, obviously is not going to happen with this report. But at 10 million still, or 9.8 million job openings, the labor market is still essentially where it has been over the last couple of months. Very, very tight. And that's still a negative thing for the Fed. So the markets want to see these numbers completely start to plummet. Now, the FOMC minutes comes out at 2 p.m. This is going to be equally, if not more important than the JOLTS job openings because it is the Fed. Now, with the FOMC minutes, it's basically a transcript of what happened at the last Fed meeting. You can get some glimpses into potentially what the Fed's thinking, how they're going to raise rates in the future. Now, we just got the SEP report, so I don't imagine we're going to get a whole lot of insight, but there's always that off chance that the Fed slips something in that they want us to know before the next Fed meeting, to move the markets one way or another. Sometimes the Fed will do that, give you little hints in the FOMC minutes to try to get them, really to get the markets to go up or down. Sometimes it's up, sometimes it's down, but the Fed does that deliberately. So question is, does the Fed give us an insight what to expect at the next Fed meeting? I don't think so, but it is a possibility, and the markets will react very aggressively at 2 p.m. when this does come out. There will be a big move, up or down. 9 times out of 10, there is that big move. Sometimes it's bigger than others, sometimes it's smaller, but it will probably set the tone for the rest of this week. Now, speaking of the rest of this week, we'll just run through all the economic data we really have for this week. Thursday, you have the balance of trade coming out at 8:30 in the morning. That's pretty much it. Now, Friday, 8:30 in the morning, you have the non-farm payrolls. This is going to be probably the biggest catalyst of this week. I think they're all almost equally as important, but the non-farm payrolls is the amount of jobs that were added, and this is what could really vary a lot. This is what could, start to plummet and really give you a bullish reaction in the markets, not necessarily the job openings. They don't tend to move around nearly as much as, say, how many people were fired and how many people were hired in December. If there were more fired than hired, this number is going to be negative. If there's more hired, I think I said that backwards. Nonetheless, right? You guys get the idea. Non-farm payrolls going up, jobs are being added. And we are expecting 220,000 job adds for the month of December. Typically, December is the month where people do get hired the most because it's the holiday shopping season. It's, boom time, right, for businesses. November and December, I should say. So we're expecting good numbers here. If they come in less than expectations, it's going to be a very positive thing. And I would not be surprised to see a 3 to 5% rally if these numbers come in much lighter than expectation. So there is that for you guys. If we do take a look at the Ortex data, it's not hugely important when it comes to Tesla. It gives you the short interest, gives you the option activity, in which I really like to pay attention to with Tesla, because a lot of people do trade Tesla options. Depending on how this looks, you can get a feel for where the sentiment is with the stock. And as of Friday, the last trading day, you've seen about $530 million worth of Tesla options, and the positive order value was 87%. Now here today, you've seen 1,000 orders totaling $1.41 billion. That is triple the option activity that you've seen on Friday. That is insane. To see even $500,000 is a lot for a day for any company. Tesla, just any company, that's a lot. You don't see these numbers even on an Apple, and let alone $1.41 billion of option activity like you see today. Now, the positive order value was 52%, so you were above 50%. So technically, today's option activity was net bullish, but again, these numbers, they may vary a little bit. Overall, I would say today was a neutral day in the land of Tesla options. Some people call it the biggest casino in the world on Wall Street and on Main Street. I don't know about that. I just think we like the stock. Okay, now let's get into some technicals on Tesla, then we'll go ahead and wrap up this video, guys. So let's just be honest, Tesla officially crashing. If you really couldn't say Tesla crashed at most points in 2022, but this is definitely a Tesla crash. This is definitely a mass liquidation of the stock. You are seeing consistently over 200 million shares that are trading hands, and again, a lot of this is selling pressure. Now you're getting under the support level that you've seen in September of 2020. You have officially broken and closed under that, closing out the trading day here on January 2nd at $107.07. This is obviously with split adjustments. So, I mean, you can imagine if the stock never split, you know, the numbers would be a lot bigger, but they would be the same. And after all, from this point of view, guys, you're not going to like this. And I don't like saying this. I don't think it's going to happen. If it does happen, oh boy, are we in trouble in the markets. Let's call it that. But the next support level is at $90. And that's a very small support level. You didn't get much testing of this support level last time we were here, July and August of 2020. Yes, you did fall a little bit right here, found support, fell a little bit right here, also found support, but it wasn't tested as much. If you break that level, if you break the 90, it's 91 and some change support level, your next real support level is $66. So that would be a huge decline from these levels. So it's not like I think that is going to happen, but if things don't turn around for Tesla, if that bullish sentiment does not come into the stock relatively shortly, and the markets go through this downturn, those are the levels the stock could theoretically hit, but they obviously don't have to. And that would still, let's just for shits and giggles here, like, I mean, I don't think this is gonna happen, so nonetheless, let's do it, guys. So let's go from where we currently are down to $60. It's actually not as big as I thought it would be. That would be a decline of about 38% from here to get down to that lower end support level. So I guess that could be potentially a positive thing for a lot of people, because after all, if you start buying the stock now, you're only going to lose 38%. I say only lose 38%, but I mean, you were down almost 70% for 2022. So it looks like the best buying opportunity you're going to get for Tesla in a long time is coming very shortly. And obviously this could all turn around even tomorrow, even by the time you guys are watching this video. If you're watching it on January 4th, yeah, or I've been saying January 2nd. It's not midnight yet. This video is being recorded quite late in the night. It's around midnight, so it's still technically January 3rd today. So all the times I said January 2nd, this video is for January 3rd. We weren't even trading on January 2nd, so hopefully you guys caught that earlier in the video. But nonetheless, for January 4th, you know, I'm going to be watching the economic data. I'm going to be watching how the stock reacts around this support level that we closed under, around 108. I want to see, does the stock close above that tomorrow? If it does close above that tomorrow, all hope is not lost for the 108 level to continue to be Tesla's support level, guys. So that is gonna pretty much be it for this video. We talked for a while. There's obviously a lot more that we could talk about, but I can't make an hour-long video on you guys. So that is going to be it for this one. Stay tuned to the channel for updated videos in this continuing saga of Tesla stock just keeps crashing, guys. That is going to be it for this video. Hit that like button and subscribe to the channel if you like this video. If you like these kind of videos or you just like to make money, we'd love to have you over here on the channel with us. Thank you guys for watching, and I will see you in the next one.